Good morning, everyone, and thank you for joining us on Morning Markets. Today, I wanted to look back to the discussion from the European Central Bank yesterday, the ECB, and also look ahead to what we are expecting this afternoon with regards to US inflation. So turning to Europe and to yesterday, very much a focus on the ECB and their interest rate meeting. The ECB, unlike a number of other central banks, have been more reluctant to reduce the size of their balance sheet, but also to increase interest rates. That has changed over recent months in terms of the discussion from policymakers, but also as Eurozone inflation, like we've seen in many other countries, has continued to push higher. So last month we had a reading of 8.1%, and that certainly appears to have prodded the ECB into action. That's quite important because actually they haven't increased interest rates for over 10 years in the Eurozone. So at July, or come the July meeting, they have indicated they will increase interest rates by 0.25%. And then also in the statement yesterday discussed the possibility of moving more aggressively in September, possibly of 0.5% or something of that magnitude. And that has really changed market expectations of where interest rates will go in the Eurozone. And also we've seen that being impacting in sovereign bonds. So sovereign bond yields rising yesterday as a result of this move, and very much a different story between different parts of the Eurozone as well. So Germany not seeing the same magnitude of increase, but to give some context to the increases that we've seen. If we go back to the beginning of this year, we had a German 10-year bond that was yielding 0.18%. Looking at it this morning, 1.44%. So that gives you a sense of the magnitude of how markets have moved to price interest rate changes. Within that, there is divergence between rates in Italy. We see German, as I've said, at 1.44. If we look at Italy, somewhere in the region of 3.5%. So quite a divergence there opening up. I think the other thing really to touch on then is the folly of trying to forecast. If we look back at the beginning of the year, market was expecting Eurozone interest rates to be zero at best at this point in time. Now we're forecasting a rate of 0.9% by year end. So therein the challenges that policymakers face, but also the fluid nature of asset markets at this point in time. Just looking to the day ahead, Friday, typically an important day in the US for economic data. Jobs report, usually the first of the month, but this week it's about the consumer price index and the inflation rate. It's important because we saw inflation last month fall from 8.5 to 8.3% at the headline level. The market is probably looking for either stability at that 8.3 or a further reduction. So we'll report back on Monday on what will be a very important figure for asset market performance today and into the weeks ahead. We'll leave it there. Many thanks for joining us.
Subscribing to the True Potential YouTube channel is quick and easy. Simply go to the channel on your desktop or through the YouTube app on your phone and click the subscribe button. You can then press the notification bell symbol if you wish to be notified as and when new videos are released. Doing this is a great way to keep yourself updated with market developments and personal finance insights. Thank you to everyone who has subscribed, and we look forward to continuing to help you do more with your money.